Is this momentum here to stay? Two special guests join in to discuss that. Amit Nigam, who's the head of equity at Peerless Mutual Fund, and we've also got Nirav Sheth, head of sales institutional equities at Edelweiss. Gentlemen, both of you, thanks so much for taking time out for us. Amit, let me begin by asking you, given the nice leg up we've seen for our markets of late, what are you making of the market valuations? And also, do you believe that this rally that we are seeing is here to stay for a little bit more at least?
What we have seen in the last couple of days, especially after the bad data out of US on Friday, is a rebound because of bad news being good news. The concept that the lift off of interest rates in US probably may not happen in this calendar year, but may get rolled on to the next year. Now, if you see, our markets had corrected significantly in the last 2 months of August and September, which to me was probably a factor of demand and supply, wherein a lot of FII money, about close to $3.5 billion actually went out of India. This resulted in the correction that we saw. And if the probability of interest lift-off now moves on to the next year, then we might see a relief rally, which we are seeing at this present moment of time. Now, having said that, this has to be supported by the valuations, which currently on Bloomberg estimates would be around 16 to 17 times. We don't focus too much on these earnings and valuations, but for a 20% kind of a growth for Sensex companies, it seems to be a fairly good level to invest.
What are you making of the market right now? Earlier, we were having a discussion with you where you indicated that perhaps you wouldn't be a buyer immediately in the market, but on corrections, say in the range of 5 to 7% here. Do you think that would make a case?
You could look at banks, you could look at public sector banks. I'm okay looking at something like DLF, given the kind of annuity flows that they've got. To me, a starting point is that over the next couple of years, where do you think you can make outsized returns within the large cap space? And I think that there is significant, so the way I look at it is that, there is too much of euphoria in these consumer pharma names. And I think there is complete disconnect in terms of whether you want to look at, let's say, something like PSU banks, simply because of the fact that, there are concerns about near-term visibility. When the tide changes, I think it's going to be very, very difficult to catch. Just look at what has happened to Tata Motors, right? The stock is up now 15% in 2 or 3 trading sessions. Market occasionally does that. Obsessive focus over near-term earnings profile will cause them to react wildly in one direction either way. To me, that opens up very brilliant opportunities of investment.
Nirav, let's talk about Tata Motors a little more, because that particular stock was in focus in today's session as well. Which angle are you taking? The bear side, that a lot of uncertainties still remain, or the bull argument, which says that so much damage has already been done, perhaps all the bad news is in the price now?
Okay, the point I was trying to say is that if you believe that the stock was fairly priced about 6 months back, right, it has lost 50% of its value. That eventually means that you are discounting losses in China in perpetuity, right? So I don't think that anyone on the street actually is making any kind of a case. Secondly, you have to differentiate between what are cyclical downturns and what are structural downturns, right? So even if you make a case that something is wrong in China, which none of us know, and it might well be the case, you can still argue that it is a 2, 3, 4 quarter, maybe a 1 year story. It's not that you can very convincingly make a case that in 3 years, JLR will be selling more in China than what it is selling right now. That is true for most of the luxury cars in most parts of the world. And therefore, when you are presented with an opportunity which overdoes any cyclical problems and tries and put it as a structural problem, I think it opens up an investment opportunity. And I was just trying to highlight the fact that if you look at Maruti, it's trading at an absolute market cap of about 1,40,000 crores. JLR roughly works out to somewhere around 1 lakh crores. I just can't get around this. If you take a 5-10 year perspective as a private investor, would you want to own JLR in totality or in Maruti in totality? One is a luxury brand, huge branding power, technology, global franchise, vis-a-vis a mass market player, probably at the peak of the market share. So I think there's a disconnect, right? Which is again because in Maruti people are looking at near-term earning visibility and probably trying to overlook what could happen in 3 or 5 years. So for me, it's a very easy call, Tata Motors over Maruti. We also like Maruti, but the preference is towards Tata Motors.
Right. I mean, let me ask you then, what are the stocks and sectors in this current environment that you would sort of like to accumulate in your portfolio, and how should one really go about looking at stock-specific ideas in this environment?
Sure. So what we do is, as I said, we focus on two parameters for our manufacturing companies. One is return on capital employed, and the other is free cash flows. And what we have done, we have constructed a proprietary score called a Peerless Score of Financial Strength, basis which we evaluate whether a company has been good or not in the past. And when I say good or bad, it's from the perspective of minority shareholders. So to us, the companies which earn enough ROCE to cover for their cost of capital tend to do well over longer terms of investment. So we essentially find those companies, and if their business model is good enough to sustain the growth over next few years, we choose those companies to be a part of our portfolio. And that's how we have constructed our portfolio. And wherever the valuations are comfortable, we go overweight. And where the valuations tend to get stretched, we tend to bring down the weights of those stocks.
Right. Amit, time for one more question then, and let's talk about Bihar elections. How important do you believe that will be in terms of market movement and a sentiment driver?
See, we are not experts on politics, but if I were to share my 2 bits, is that definitely everyone in the market would keenly be looking at how these elections go and what the results are, for 2 reasons. One, the victory by the central ruling party would essentially confirm 2 things: that whatever this current government is doing at the center is getting a thumbs up from the people, and second, by a victory in this state would help them get the necessary numbers in the Rajya Sabha, the upper house, and therefore would support in the passage of a lot of bills which otherwise have been stalled. And if that happens, then I'm sure the markets would take that in a positive sense. Having said that, this event per se would be a small sentiment impact event in the long run of investments over longer terms.
Amit and Nirav, both of you gentlemen, thanks so much for taking time out for us and chatting with us this evening.
All right, let's take a short break on that note, but don't go anywhere. On the other side of the break, we'll put the spotlight on the various stock movers of the day and what stocks you need to keep an eye out for in tomorrow's session, with the battery of researchers and reporters joining us on the other side.